Hey everybody, Tom Gentile. Welcome to day 2 of our 2019 market outlook. So if you joined us last night, we had just a slight discussion of 2019. I showed you a once a year strategy that really does outperform the buy and hold strategy quite a bit.
Hello?
I showed you just on its own was at the 10.5% level, and then we juiced it with options. Also, we had Mike Wade on yesterday. Mike was discussing how to enter into the Q1 earnings season, had a lot of great information, and even touched on gamma scalping, which is something we're going to be covering later on in 2019. That's for all of you guys out there that have a little bit of experience in options. Tonight, we're going to change course. It's all about contrarian, being a contrarian, and we've got 2 contrarian trading strategies that we're going to be talking about tonight. So with me tonight is Ray Voss, who is one of our top programmers over here at Tom's Option Tools. Also, Rob Roy is joining us. For some of you, you haven't heard from Rob in years. I found him. He's alive and well. He's still living in Florida, and he's still a contrarian trader. We'll talk to Rob here a little bit later on in the program. Before we begin, guys, just keep in mind that we do have a Q&A session where you can ask questions, pump in your questions in the Q&A box, and we'll try to get to as many as possible. Also, the session's being recorded. I'll get the recording to you as soon as I possibly can once we get it spooled up after the live event is over. Finally, disclaimer you see on the screen. All right, you can hit pause at any time on the recording when you get the recording if you want to read the whole thing. All right, it's there for you. It's there for you and for us. A couple points I want to make about the disclaimer. Number one, stock and options trading has large potential rewards, but also large potential risk. The other thing I want to mention is myself, Jay Harris, who's here with us tonight, Rob Roy, Ray Voss, everyone with Tom's Trading Room, Optionetics, including not only our employees but contractors. We're here as educators. All right, we're here to show you how it is we trade using what we call rules-based trading. All right, because of that, we're not your broker. We're not your investment advisor. All right, you need a broker to trade with. You must meet certain requirements. Everything we're going to talk about tonight is in U.S. dollars unless noted otherwise. Now, with that, what I want to do is I want to bring on our first contrarian of the night. And all of you that are here right now, you should have heard, if you follow Tom's Option Tools, you should know about one of the strategies we have called Darknet. And Ray is going to touch on Darknet, but we are unveiling to everyone today the new Darknet trading app. All right, the Darknet trading app is now available on iPhone and Android devices. However, you must be a partner. All right, we're going to be releasing it later to all of our tools folks, our annual tools folks, but we're offering this up to our partners first as they get first crack at this. So what I'm going to do is I'm going to turn this over to Ray. Ray, are you there, ready to go?
I'm here, ready to go.
All right, let me just, with the click of a mouse, you should now be the presenter. So if you can grab that, and I will let you know if we see your screen, and we do.
Hey, how about that? Modern technology is a wonderful, wonderful thing. Good evening, everyone. My name is Ray, and I'm going to be touching on the Darknet system. And so let me just move right into it. This is basically a summary. And what it is it looks for what we call stock channel collisions. And I'll get into more details about that. But that is a signal, or basically it's the source that we can generate signals from. And there are 4 types of basic Darknet signals. There's B, and these letters, don't worry, there won't be a quiz or anything, but those are the symbols that will occur on the Darknet charts. So when you see a B, it means that the system is bullish. An L is a re-bullish, okay, and again, this is after the first bullish, but there's another time they collide, and so it issues another one, then an ambiguous, which is a third time, like third time's a charm. And there's the S, which is the stop, which is to exit all Darknet trades. Now, Darknet is basically a bullish system. So if you see a stop, the stop is an end to a bullish or the bullish or ambiguous signals. Okay, when you see a stop, that does not mean you're short, you start a short trade. Okay, again, to reiterate, this is a bullish signal, so a B or a bullish starts the sequence, and then the S ends it. One of the things that will happen on the displays, you'll see some indicators. Once you're in a trade, which would be issued, you decide you like the bullish signal and you get into it, then prior to the stop, you'll start getting indications saying that the darknet is starting to see signs that this signal is weakening and it's about time to get out of it. And then those are the kind of the theoretical things, if you want to think of it like that. But we also have actionable items from them, like bullish call options and bullish put credit spreads to actually trade these. So I'm going to start off with what is a stock channel. And it's pretty obvious, well, but there are a lot of little subtle details to it. There's a center line, a width, and the days. Now, basically, the way the system is going to work is it's going to create multiple channels. And you'll notice all these channels end at whatever the current date is. So it's not really a lagging indicator. It's basically got using the latest data and everything like that. So what it will do, this is a single channel. And here's when you start to see the three channels. And what it does is it will basically calculate the best up slope. In this case, that's the pink one. The best sideways, that's the green. And then the blue is the best downward. And this one looks pretty obvious. You can see that the pink is going up. That's the up, and the sideways going sideways, and the down's going down. Okay. And the time period, there's a time span there. I believe it's like 15 to 40 days. And what that means is it'll take and try and figure out the channel using anywhere from at least 15 days up to 40 days. And through that 15 to 40 day length channels, it'll figure which is the best upslope, sideways, and down. Okay. So now when I take a look at this, here's what we call a collision. You'll notice that all of the channels are lining up. And so the first question is going to be, well, wait a minute, how can in this case, how can your down be pointing up? Remember, it's trying to find the best downslope. And in this case, there's such strength in the signal that it forces the best down that's available is actually an up. And when this condition occurs, okay, you look at that and you say, they're all lined up. This would be bullish, right? No, it's bearish. What the system has figured basically is that this is an indicator when all these channels are forced to cram in together like this or collide, it's actually reaching kind of the top of it, the end of it, and it's going to be changing soon, okay? So what it will do is, let me go to the next one here. Here's an actual signal. So what it does is it goes and it will actually generate the various signals. So if you look at this chart over here, we go over to the left side, you can see a buy, the B, the bullish, and then there's a sell hidden here. Then there's another buy, a rebuy, an add, and then finally decide to close it with a get out. Okay, a buy, a sell, a buy, a sell, a buy, a sell, a buy, a rebuy, and a big sell. And just before each of these exits are the S's. You can see those dots I was talking about. So in other words, the channels collided, if you will, to issue this bullish signal, and that generated the propelling force that goes up. And as it gets closer and closer, it starts seeing signs that this is weakening until it finally does the time to get out. Now, one of the things that's interesting, you think about that and you think, oh, that's kind of not an obvious thing, but that pattern was actually found by the math. You know, we didn't sit around and John didn't take a look at it and say, well, I think that this is going to lead to this. This literally is totally a data-driven system, okay? And there's an algorithm that determines these signals. Okay, there's the dots. Wait a minute, let me see them. Are you? Oh, there we go. Okay. Sorry, It locked up. There we go. Okay, so here's another case. This is the Coca-Cola with the darknet, and also has the peaks, which show the major peaks and everything. And you can see that the signals are pretty much catching most of these peaks, which is what it's designed to do. Okay, so I'm going to talk about these darknet tools, but before I do, one last thing. This system was developed, and there was a lot of attention given to the fact of not doing the bad things. In other words, it doesn't overfit, and it's not constantly being updated to keep it current. This system, as a matter of fact, was developed several years ago, and it's the same system in use today. And for people who do investigations into various trading systems, that's one of the hallmarks of a good system, because it says it has truly found something that's not unique to a specific time or specific stock. It's general, and it's applicable throughout time. So it'll keep finding things without just constantly being tweaked to be, oh, it's good for today. So now that's kind of the theory behind it. And now we can get into the tools. Now, on the website, tomsoptiontools.com, you can go to Home and Darknet Signals, and that's easy. You get to Home and Darknet Signals. That's on the top nav bar. And basically, this is where you can start. And I want to point in the center of the slide there, you'll see a Darknet Help. There's a little button there that says Darknet Videos. There's a ton of videos, a lot of them John did, that will explain everything in really intricate detail. And I would highly recommend, if you want to really get down into the guts of this thing, that would be a really good place to start and get an idea of what's happening. So we take a look at this right here. You can select a certain list. In this case, pennies and weeklies were selected. The number of past days displayed. A 0 means just show the signals that came in today. Okay, so if you said past 2 days, then it would show any signals that happened in the prior 2 days. Okay, and under type trade displayed, you can choose, do you want to just show the stock list? Do you want to show calls and puts, or the put spreads? And below that is the actual list of symbols with a darknet bullish signal. Now the color code ranges from the green, which says there's been the biggest one-day stock percent change, towards the red end of the spectrum, which means that they've lost in the past day. So you can tell at a glance the symbols that have received darknet signals, what the actual signal is. That's what the R would mean, rebuy. And then you can also get an idea of what happened to that stock during the day. Pop to the next one here in the tools, and you can go and you can select calls. And what this will do is when you run the search, you'll actually get this list. So in this case, you have a Walmart, for example, and you can see what the possible trade would be. It's a call down there in the bottom, and it ranks them in percent to double, which is basically the stock price, how much the stock price has to change in order for you to get a double in your investment. Okay, so clicking on the link of where it says call trade, that'll actually bring up the risk graph for that call trade. If you want, you can save it, and you already have a trade built and ready to go. So this would be generating calls. Okay, and this is what a call, for example, would look like. And this would be output of the risk graph. So you can see the stock chart in the back. There's also the IV and the SV bands that are on that chart. You'll see the darknet signals. Now on the right, that's the risk graph, and we use what's called the modern style risk graph, where instead of the horizontal axis being the stock price and the vertical being the profit, we rotate it. And the reason for doing this, it's really actually, once you think about it, you wonder why nobody had done it before. But they both the historical stock chart and the risk graph are aligned. You see the vertical axes of both charts line up. So you can take a look at your risk chart on the right, and you can go back and look and see, well, what has the stock done in the past? And they just map one to just left to right. Everything's there, and all the information is available on the chart. Now, the other thing you can do is you could put credit spread. And again, this is the same thing, except it generates a credit put spread, as you can see from down there in the bottom. And again, click on the put spread link and you'll get a risk graph. These are based on the slippage. Obviously, the lower the slippage, the better it is getting into it. And here is now the risk graph and the stock chart for the put credit spreads. And you can basically see that it's cheaper to get into, but you have a limited upside. So again, and it's a higher probability trade. Now, one of the other nice things is that Darknet also comes built into it as part of the package is a back tester. And you can back test stocks, calls, and put credit spreads. And what it's doing is it's actually going back, and you get to select what list of stocks that you want and go up to 3 years back, and then it will show you how those trades would have done. Now at the bottom you'll see we also have a Darknet and Darknet backtester for the crypto tools, which are also on the website. So the put spread backtest, for example, in this case you can see we're doing the test, and down at the bottom you will see the results. So percent profitable for trade, 80%, percent profitable per stock, 82%, ROI 20%. Those all looks like pretty good numbers to me. We can take a look at the call back test, for example. And so doing this, you're not only able to back test the strategies, you can actually, by doing both of these, you can actually compare. Do I want to do calls? Do I want to do put spreads? And you can do the testing. And you get to pick which list of stocks you want, which makes it really an invaluable tool for really getting into the detail and looking at things and seeing what's going on. Okay, so that was pretty much the Darknet tool that's on the website. Now, like Tom mentioned, we've also very recently released an app for mobile devices, and it's called the TTR, Tom Trading Group Darknet app. This is the high-level view of everything. And basically what happens, out of Tom's tools, optiontools.com, we have Darknet signals. Now those signals, basically, you can think of them being available to three things. They're going to be available, here's a list of all of our Darknet signals. But rather than just have something that shows these are all the signals, you can also, in your Tom's option tool site, you can also create a list of stock symbols that you want. You put those into your Darknet signals list, okay? And that is actually case sensitive, capital D, ArcNet, capital S signals, okay? And you can also do the same thing with putting trades into Darknet signals folder. Now, what's different with those things, any stock that's in one of those two folders, or the folder or the list, those specific lists or that specific folder, if they're in there and there's a Darknet signal for that, and we do the alerts 3 times a day, you'll actually get an alert on your phone, okay? So it's not just now, oh, look, you can see the same things you want to see on the website. You can now actually get an alert to your phone, and it's tailored for the stocks that you're interested. For example, in your list, you might say, these are stocks that I'm kind of interested, and if I get a Darknet signal, I'm really going to hop on it, and maybe it's time to get into them because I've got some other, another confirming signal. Okay. The signals folder, those are trades. Those, for example, might be trades that you're in. So if you're in a trade and there's a Darknet signal alert that's saying, hey, near term, there's high probability we're going to get a move in a certain direction, well, that's something that you might be interested in getting, and you're going to get an alert for that. And again, it's tailored to you. If you might have 100 symbols in your basic, could there be 100 stock symbols that get a Darknet alert? But if they're not in your Darknet signals list or folder, you're not going to be bothered with an alert. You're still going to be able to see them if you want, but you're not going to get bothered. So there's really an alert function here that is unique to this, even the website doesn't have. So this is an example. You could go to Edit List, which would be Website Lists Edit List. And I created a list called Darknet Signals. Notice it's spelled capital D and the capital S. and I entered those symbols into it. And you'll also notice that down in there, there are some dollar signs. Those dollar signs mean those are cryptocurrencies. So the same thing, you'll get an alert if one of your Bitcoin or one of your cryptocurrencies is in this darknet signals list. Okay, so it can handle both of those. This is an example of how to build. And basically, you can do the same with saving folders, which is trades, and you put them in a folder named darknet signals, and it will go through and find them. So now we actually take a quick look at, this is what your screen will look like on the right. And this is the login page. Use the first one that'll come up. And to log into it, you need to use your Tom's Option Tools Com username and password, and they're both case sensitive. Okay. Now, I've highlighted down at the bottom something that's important. When you first install the app, and anybody can install the app, but you obviously have to be authorized in order to get access to it. The first time after you install the app, you need to click on the Sign In Now, okay, before you can log in. Okay, the login screen is going to come up first, but the first time you need to go to Sign In. And what the sign up page is, you only have to do that once for each device, and you can have up to 3 devices. What it basically does, this sign up, is it associates your tomsoptionstools.com username and password with that device. So it knows that, it knows who to send alerts to and everything else. Okay, so you are the owner for that purpose. Okay, and you can have up to 3 devices. Now, if you get to more than 3, well, we have a way you can go into settings or whatever to basically go in and say, hey, I'm on this one device, erase my other 2, and then that frees up 2 more slots so you can put one of the other ones back in it or add a new one or add 2 ones, or so that's all taken care of. Okay, so what will happen is you sign up on this page and it'll take you back to the login page and you're good to go. And this is the list page. This is kind of the main page that you're going to be seeing. And this shows the darknet signals. Now, you'll notice at the top, you'll see, well, first off, you'll see the time. That's the date and the time of the latest stock darknet signals update. The little circle arrow is a refresh. You click that, and it will get the latest signals. Now, below that, you see some tabs, stocks, trades, and all. So right now in this screenshot, this is stocks. So what this is doing is showing all of the stock symbols that I had in my list, my darknet signals list, that had a darknet signals for just current, okay? And so if you click on the trades tab, that would be all of the folders, all the stocks that are in the folder named darknet signals, okay? So you click at that. Or if you click on the all tab, then it'll show all the darknet signals. And you may or may not be interested in all of them. You may have heightened interest in the ones that you put into your stock list or your trade reasons for the reasons we talked about before. Okay, so again, I talked about what the stock tabs and the trades tab does. Okay, so now one neat feature, and this was Tom's idea. It was really cool when we actually did it. I thought it was really kind of neat. When you tap on the stock symbol, this is what will show up on your phone. So you're not only getting to know, okay, for example, ARI or whatever signal has just had a darknet signal. You can also take a look and see the stock chart, and it shows you what the signal was and how it stands and what the stock itself has been doing. Plus it has the dividends and earnings markers on it, which again, that's just even more information. Okay, on this one, you'll notice on the right of each of the colored bars, the green, yellow, and red, there's a plus and minus sign. When you click on the plus sign, what it'll do is it will expand it. So they're grouped into all the bullish. You click on the dark green, it'll give you all the bullish. Click on the light green, the rebullish. So it actually categorizes it. So we have a lot of ways to segregate, to group all these different trades between your different folders, everything, the different types of signals. Okay, and if you click on a header, and it just seems like everything on the page does something, but if you click, for example, on the close heading, it'll sort the closes, so that'll be from high to low. You click on the close header again, and it'll load a high. Same with percent change. That's a percent change in the price from the prior date to the current price. If you want to see the stocks symbols in alphabetical order, you click on the stop, add on whatever that title, the one above the stock symbols, and it'll sort them according to those in that order. Now, there's also a settings, and I'm going to go back up. You'll notice the 3 horizontal lines. That's basically like a menu thing. And when you get that, you get this. And what this is basically talks about your settings. Okay. And so some of the key things are, you can pick on the list is the screen we're seeing. Alerts, if you want to set up the alerts, messages to view messages and to get message alerts. There's settings and help and the logout. Okay, for the alert setting, basically, the signals themselves update every 15 minutes or so at the beginning and end of the day, and half an hour during the rest of the day. But we basically pick 3 key points. The first alert, which is the first one after the first update, a midday alert, and then the end of day alert. Okay, and you can receive alerts for those 3 times. And you can select which of those you're interested in. If you want to get all of them, you want to get none of them, knock yourself out. The purpose is it's selectable. You can pick what you want. The times over there are basically when the first alert will happen. Now, if, for example, you may have this and you've got the app and you've got it all, but you don't have anything in your darknet alerts list or folder, you're not going to get any alerts. It doesn't mean it's not working. It just means there are no symbols in those folders or lists that have a signal. Okay? So you're not bothered unless you really want to get notified of that happening. Down on the bottom, the receive darknet alerts with app in background allows you to still receive alerts even if the app is not on the main screen, it's sitting off in the background. Okay. Settings, messages, if you want to receive messages or alerts, you click on the messages there, and that'll allow you to set alerts or not. The login, you can have the option to save the username and password, and what that basically means is once you log in, every time you get a login page, it'll be pre-populated. Click and login, you're good to go. Don't have to remember anything. If you want to clear that so that doesn't happen, you go in here, set the same setting to don't save it, and when you log off, you'll have to re-enter everything. You have control over that. And the clear registration is what I talked about earlier. If you want to add another device for use, and you have 3 of them already used up, that's in there. Okay. And it's in the Play Store and the Apple Store, and search for TTR Darknet Alerts. If you just search for Darknet, you might find a lot of Darknet things, so I would probably recommend you put it in TTR and Darknet, and it'll pop up there. And just in summary, what do you do with the Darknet app? Well, number one, you can do it without having to be tied to your computer if you want to see what Darknet is doing. You can, this is the really neat thing too, is you can get specific alerts tailored to you on the trades or the symbols in your watch lists. And then you have all sorts of ways to organize and go through the lists on the list page. And then hopefully you'll even find other ways that it'll help you in ways that I can't even think about. The idea is hopefully it's something that can help you. Any questions? Optionsanalysisray.com is me. If you have any questions, you can email me, or there's support@tomgentile.com. And that pretty much wraps me up.
Jay, any questions?
More or less just the individuals and such. I can take care of them individually, but no other questions coming in.
I saw one that I like, and I can answer it too, is what are you doing with Darknet in this market environment? I can tell you exactly what we've been doing. We've been taking the signals last month as the market was going down. You're talking about taking signals using January and February options. Well, over the last week, some of those signals actually didn't go down with the market because there were signals in companies like Campbell Soup. There were signals in gold stocks. There were signals in stocks that just didn't move down when the market moved down. But there were a lot of signals in stocks that do move with the markets. And of course, this last week, a lot of stuff went way positive. Looks really good. I think I only see one loser on record within the last few weeks, based on what Darknet has. One of the signals that came up today was Urban Outfitters. So I'm just throwing that out there for you guys to take a look at. So that's a one you can take a look at. There was a Darknet buy. Also, just wanted to thank all of you for the kind thoughts on the Darknet app. I want to let you know this. We have an app coming for Money Calendar. All right, it's going to be an iOS and Android app where you actually get today's Money Calendar picks. So that'll be something that we'll be unveiling. I think that's going to actually come out in the next, I'm going to say the next month. Within the next 30 days, we're going to be talking about that too. So that's going to be available for our tools folks as well. We'll probably throw that to our partners first, but both of those will be coming out real soon, both the Darknet app and the Money Calendar app for our folks that are using our tools. So thank you very much, Ray. Great stuff. I'm going to go ahead with the time we have left, and I'm going to go ahead and pass this right over to Rob Royce. So, Rob, welcome back.
Thanks, Tom. Appreciate it.
Awesome to have you. What have you been doing the last several years?
Same old thing I was doing before.
I heard you making money on college games and losing on the NFL. That's what I heard.
Well, that was only like 2 years, and I stopped the NFL stuff. It's only college now.
All right. Good pattern. Stick with the ones that work. Okay,
absolutely.
So
stick
what do you got to show us tonight with Elliott Wave? Because I know you still trade Elliott Wave. It is your favorite trading strategy. I asked, in fact, guys, I asked Rob to do a small kind of a reboot on what Elliott Wave is for those of you that are maybe new to it, and then he's gonna jump right into charting, and we're gonna start looking at some stuff. So Rob, take it away, buddy.
All right. Thanks, Tom. Appreciate it. It's good to be back. Thanks for having me. And I just wanted, before we get into this, just a little bit of history, because this Elliott Wave stuff is going to be like a resurrection for some of you. Hopefully you've been following it. But when George and Tom started Optionetics way back, and we're going way back, and it was growing so fast, obviously they needed to expand and bring more people in. I was one of the first people that they brought in, but when they brought me in, I didn't know anything about Elliott Wave. I'd never even heard of Elliott Wave. And when we first started teaching people that, and I know a lot of people that are floor traders, ex-market makers, etc. And in those days, some of the people they'd kind of poo-poo it a little bit. But now, if you're paying attention to the financial networks, almost no week goes by where there isn't some floor trader talking about an Elliott Wave pattern, a Fibonacci retracement, something along those lines. So George and Tom were so far ahead of their time in preaching this Elliott Wave stuff, and I've stayed with it the whole time. And I'm going to show you when I first got into it. I'm going to talk really, really fast because Tom's giving me 30 minutes, and he knows damn good and well I can't talk about anything in 30 minutes. So I'm going to go as fast as I can because I do want to get to the charts. And there's been some fascinating things that have happened. Tom had me in early December, and the Elliott Wave pattern hit it dead on the nose. But I'm just going to hit the important things, and then we're going to be doing an Elliott Wave class. Tom will tell you about that later in the year, where we'll get in a little bit deeper into this. I'm going to give you a brief overview. If you really want to get into it, which I encourage you to do, that'll be the opportunity to do it. But this is probably one of the most important phrases. Wave theory is probably the most complex and all-encompassing form of technical analysis ever developed. It requires a lot of time and practice to master. I am a firm believer, and not everybody agrees with me, but I'm a firm believer that nothing worth having comes easy. And Elliott Wave is not an easy system to master, but once you do, it's incredibly accurate, and it's so accurate that it makes you wonder why you wouldn't pay attention to it and at least have it as one of your tools. I like Tom's toolbox theory, but having one of your tools that you're using in your trading, a maze of interlocking, interdependent concepts that understanding only portions of the theory is insufficient for accurate forecasting. Basically what that means, this is a guy, Glenn Neely, that really dissected. He wrote a pretty famous book on Elliott Wave. Basically what he's saying is you can't do this half-assed. You're either going to learn it or you're not, but don't just try to do it halfway. if you want to learn Elliott wave, learn it and trade according to the rules, but otherwise stay away from it, because if you don't understand the rules fully, you may not have as good a success with it. But this guy, Ralph Nelson Elliott, is the guy that invented it. He was actually a mathematician. He worked for the Panama Railroad Company. He was traveling a lot, and his history is that in all those travels back in those days, late 1800s, early 1900s, he contracted a physically debilitating disease. So he wasn't able to travel anymore. He was kind of homebound, but he became fascinated with the markets, and he thought that there is a mathematical way to forecast based on what has happened, what is likely to happen moving forward, believing that the masses move the market, the herd, the majority of traders, whatever you want to call them. If you follow along with them, quite often you're going to be right. So he would analyze them and then use that past data to forecast where things were going to go. And that's basically where Elliott wave came from. Now, Tom talked about tonight that we are contrarians, that Ray and I are contrarians. And if any of you are still familiar with Elliott wave, you might think, well, what's contrarian about that? That, Elliott wave is a directional trading system. It is, but if you really get into the works of Elliott, he was a big believer in the corrective patterns. That's where the contrarianism comes in, because corrective patterns are going against the trend. So if you have an impulse move, a trending move, then the correction move comes, and you actually could have a corrective move to the upside. Most people view the word correction as a downward move, but in Elliott's world, a corrective move is a move against the previous move. So if you had an initial downward move, the correction's to the upside. And that's the corrective patterns are the ones that I've found that work so well. So there's three impulses, there's corrections. Why is it called a wave? Because they're not necessarily sharp corners, the V's. The movement over time kind of gives you the impression that it's like the waves in a water. So that's where it comes from. But this is also key too. Waves are a result of imbalances in the markets which occur between the number of buy and sell orders for whatever reason. In other words, we don't care what the reason is. We're analyzing what's going on. What are the traders doing? And each time one force, whether it's supply or demand, overpowers the other, even for the shortest period of time, the market changes direction and a new wave is started. And that's what I believe the market is. It's supply and demand based on human fear and greed, our two primary emotions, which are fear and greed. And then you analyze that along with supply and demand. So you got, facts as far as the orders, and then you can come up with what's likely to happen. So the 5 wave patterns are this. You've seen this before. If you ever attended an optionetics seminar, so you have 5 waves, 3 directional waves, 2 corrective waves, and then you move into a corrective zigzag pattern. Likely, sometimes it's a triangle following the wave 5. The patterns can move down. They call them fractals. In other words, you can have waves within waves or patterns within patterns. It's the same thing on a smaller and smaller basis. And that's where these examples come from. The human body is full of Fibonacci examples and Elliott wave examples of these fractals. Like, you have veins, arteries, and capillaries. It's all the same. They just get smaller and smaller. So you can trade this in any sort of time frame you want, in any market you want. There's your lungs. Look at the bronchial tubes that come in, and then the same things branch off smaller and smaller and smaller. The tree, look at that. A tree, you have the big trunk of the tree, and then every one of those branches is like a mini version of the tree. So you get the idea on the fractals. Now, within the wave 3, which a lot of people think, well, you don't trade the wave 3, you wait till the wave 3 is done. But I say that, well, if the wave 3 is widely regarded as the strongest wave, why don't we trade it? Because there's patterns within that wave 3 that we can trade. And that's where the corrective patterns come in. The corrective patterns really show themselves within the wave 3 because it's normally such a strong and long wave. So you have these patterns, the ABC patterns, within the primary 1, 2, 3, 4, 5, and especially within the wave 3. You have mono waves and you have complex waves. A mono wave is just when an impulse moves in a 45-degree angle. That's it. It just kind of moves straight. I'm going to show you that in USO, which is an oil trade that we just closed out. And we talked about this the last time I was on with Tom. So finding directional trades, the impulse rules, blah. We'll get into all these rules later on. I really want to get into the most important part of this, which is showing you charts, what's happened, how it's been accurate on the market. When you have the wave 4, if it moves up 38.2%, which is one of the first Fibonacci levels, then you're starting to get a sign that you have actually completed the wave 4 and you're in the wave 5. And this is called a summation series. When you deal with Fibonacci ratios, and Fibonacci goes way past the age of Elliot. This is back into the 13th century. Also a mathematician. It's amazing how many mathematicians. Wells Wilder, which Tom's very familiar with, we've talked about him a lot, is also a mathematician. A lot of these guys were mathematicians and realized that they could parlay their mathematical knowledge into making profits in the stock market. But the Fibonacci summation series is basically you add the previous two numbers and you give the next. 1 and 1's 2, 1 and 2's 3, 2 and 3's 5, etc. And that's basically what the summation Fibonacci series is. And then when you divide, whether you're dividing the one number into the next one or one number into the previous one, you get these Fibonacci ratios. And what the ratios are, what you want to think about these ratios are, is they are major points of support and resistance. That's really all they are. But you want to know where those percentages are. And how many of you have heard that the machines, you hear, I'm so sick of hearing this on the financial network, that the machines are in control. Well, I don't think they're in control, but there's a lot of algorithmic trading in there. And I would be, not telling you the truth if I was saying they didn't exist. I don't know that they affect the market as much as some people say they do, but they definitely exist and they're definitely trading. Well, where do you think they're programming their buy and sell orders? They're programming them on these support and resistance levels. So if you believe that the algorithmic trading is affecting the markets, well, you want to know where they have their buys and sells, don't you? So you want to know where these Fibonacci levels are so you can follow along with the same thing that they're doing. This is the Fibonacci spiral, and all this stuff it's fascinating how it applies to science and nature. We have the Nautilus shell, hurricane actually is in that same Fibonacci spiral. The Nautilus shell is the most current one. Here's the hand. You can see that the Fibonacci spiral works perfect. Isn't that amazing? In the bones of your hand if you close a fist. And I do have a personal story here. A lot of you have heard this before because I've told it many times. My son years ago was in a very bad auto accident. He actually was in a car that had a blowout and it rolled down the interstate. And his arm came out of the window and the car literally rolled over his hand. So after the accident, the bones in his hand were splintered. They looked like bamboo splinters when you saw the x-ray. And so I was in the room with the orthopedic surgeon and he had the x-ray up and my son was in there and he was holding his hand and stuff, but we were looking at the x-ray and he was talking about where he was going to put all the pins and plates and things to rebuild his hand, because his left hand is basically, he's like $6 million man. His left hand is all metal. But he was talking about it and he's like, well, this joint is 0.618 of that part of the, and I was like, are you talking about Fibonacci ratios? And he's like, Fibonacci. And we had this whole long conversation about Fibonacci ratios while my son's holding his hand up in the air, bleeding all over the place and everything. So it was fascinating, but it was just amazing that his orthopedic surgeon used these ratios to know how to rebuild his hand. So anyway, there's the spiral. And when you look at, nothing works 100%, right? So you want to know where your risk is. And so there's the risk of failure if you're trading a wave 5. It's small once you've hit that level. Nothing's 100%, but you want to know where they are. Here are the corrective patterns. This is where I focus the majority of my trading, not so much on the 5-wave patterns, but on these corrective patterns, flats, zigzags, and triangles. Flats are sideways, and I don't like to trade sideways. I like to trade when the market's moving. So a zigzag is a directional move, can be up or down, doesn't matter. It's a 3-wave directional pattern. And then triangles are when the market is consolidating and it's getting ready to break out. And then I've created a version of strangles where you're taking the best delta and gamma. So you're not just buying one strike out of the money like you normally do with a strangle. We're going to go where the delta curve shows us that we would get the fastest movement in the options based on a movement. So one of the things about straddles and strangles that most people get dismayed about is if you're like, God, you have to get such a big move when the stock breaks out because you're buying a call and you're buying a put, right? So if the market goes up, the call is making money, but the put's losing money. And so one's making money, one's losing money, and the stock has to move a lot in order to make money. No, it doesn't. Not if you have the proper delta and gamma and that you have the option that's making money with the directional move, making money as fast as possible, then that option's making money much faster than the other one's losing money. Now you make money quicker. So there's triangles and zigzags are where the majority of my trading comes from. So you have a directional impulse move. That's the A wave. I showed you this on purpose to show you that the B corrective wave is actually to the upside. My favorite is when the B retraces 61.8%. It is amazing how often then that C wave will then extend 100%. And all that means is that that move from B to C will be the same price movement as the move from the beginning of A to the end of A. It's just unbelievable how often that happens. And then there's rules here. B only corrects 38.2%. Again, Fibonacci ratios. The C looks to extend 61.8%, not the full 100. And then if the B corrects 50 or 61.8, both of those then generate 100% extension. All right, I want to show you this real quick. And Tom's very aware of this guy, but when I first started doing events for Optionetics, again, I was telling you that I was not an LA Wave fan and had never even heard of it. And they had me do an event with this guy, Mike Perot. His last name was spelled A-U-L-T, and he's Canadian. So I say Perot. Some people say Perot. I don't even know how the guy pronounced his last name, but he was a young guy. He actually had worked for Ford, and his claim to fame was he was a mechanical engineer, and he designed the Taurus, which was one of the best models that Ford ever created behind the Mustang. And he showed me this chart. He showed me this chart, and it was on, look at the date, September 6th of 2001, and he's showing me that we're going to come down to the 261.8% level, and I was like, yeah, right. It went in one ear and out the other. So there was the forecast move. That was what was supposed to happen. No way I thought that was going to happen. Well, then something as wild as September 11th occurs, and boom, not only do we go down to that price, we go down on the exact day forecast. And I couldn't believe it. And I picked up the phone and I called him and I said, all right, hey, teach me this stuff. I want to learn this stuff. That was my introduction into it. So I have been focused solely on this since September 21st of 2001. It just blows me away. It's fascinating the way this has occurred. So let's start looking at some current charts, because I know that's what everybody wants. And then the title is Outlook for 2019. Well, where are we going to go? Well, when Tom had me on before, we were looking at this movement to the downside, and at that point in time, all we had was the beginning of this first part of the zigzag. So we came down, and then we had retraced right to the 50% level, right there. You can see we had a quick move down, and then we corrected right to the 50% level. And then we were looking at, okay, now we put the fib extensions on, and let's see where we can go from here. So then we add on the fib extensions, and we had the 100% extension here, and then it looked like we were going to go on down farther. And look, we went all the way down to the only time other than that September 11th that I've seen a 261.8% extension. And then you can see the corrective move back to the upside that has occurred since then. So if we go back over here and we do all this on the SPY chart, the question that Tom asked was, do you think that we're going to go to the 255 level, which he obviously had forecast, and this was confirming that that's where we were going to go, and then all the way down again to the 161.8% level. We've corrected back up now past the 61 to 50, and I've added the 261.8% level to see if that's where we end up coming back down. Here, we'll see if that occurs, but we already have had an extended C wave, and then we've had the corrective move, and everybody is talking about this V bottom. I'm not a big believer in V bottoms. Normally they don't hold. So I think we have to at least go down and test those lows, and we may very well come down to the 261.8% level, past that 161.8. So all the way down to 212 is a possibility. It doesn't have to happen, and I want to make sure that I am clear on this. It doesn't have to happen because this has already followed all the rules. It's done everything it was supposed to do based on the pattern, and we not only had an ABC zigzag pattern, we had an extended C wave, so we potentially could be going lower. And then we did some ad lib. And some people ask, well, if you had to be bullish right now, because remember, we were right in the middle of that downward move at that point in time, is there something that you would look at that could be bullish in this market? And MasterCard was the one that we looked at. And so here's the chart of MasterCard. It did come down with the market, but it has rebounded right with the market, and we had a gap up today. So the likely target, if you're following the rules, is going to be the MasterCard is going to come back to this wave 4 target, back up to 210 is very likely where MasterCard's going to go. Will it go straight there? If the market goes down and it goes down hard, it may pull that down with it. If not, if we're done and that's the end of it, again, I still don't see this V bottom holding. I think that we got to at least test something lower before we're all clear, as far as not just being a true V bottom that we're off to the races. We'll see how that goes, but I think MasterCard comes back up to that level. And then here's a couple other ones that I wanted to show you. We had talked about oil, and oil went down, and we actually sent this out as an alert. Now, for 13 months, I've been doing a weekly recording for Hub Financial, which is the creator of this integrated investor and profit source. And the record, it was so phenomenal, they started posting it on YouTube. So all of those recordings are on the Hub Financial page on YouTube. And you can see we have done no Monday morning quarterbacking. Everything was done ahead of time. We ran the searches. I have my own proprietary searches that I've built in to Integrated Investor, which I imagine Tom will go over with you, but I've agreed to give those out to people that sign up for the Elliott Wave Mastery class. Nobody else has those search parameters, but the results are what the important thing is, right? What can you expect to do? But for 13 months, our percentage of accuracy is 90%. 90%. And the average return on each trade has been just short of 100%. And so if you started with a $5,000 account and you put no more than $500 at risk per position, your account's now $23,000. So that's a pretty good return in 13 months, from $5,000 to $23,000. Everything is documented. You can go and look at all the recordings that were done ahead of time, all the case studies that we sent out. Everything it's all right there. So I encourage you to go take a look. The last video I posted had 1,000 views in 5 days, and we haven't done anything to tell anybody it's there. People are just figuring it out, I guess. I don't know. But the most recent one we did was this move on USO. Now this is a little different. Now this is kind of the more advanced stuff that you'd learn in the class, because we have this big impulse move to the downside. There wasn't a corrective move, even that little sideways move. You can see here, there's a little tiny triangle here. So that's a corrective position. It's not a big one, but there is the triangle, and then we broke to the downside. And from that point, that's an A wave. So the difficult thing to know is, when does an impulse A end? That's the hardest thing to figure out. So if you don't want to trade the A wave, you don't. And I wouldn't encourage you to, because that's the difficult thing. But when it gets to the point where the A is done, now you can make a trade. So the corrective part of this is the move back to the upside. And we just closed this alert out today for 108%, and it happened, and you can see how long it happened. About a week. We were in this for just about a week, and 108% trading this USO oil back to the upside. And oil broke $50 today. A lot of people weren't sure that was going to happen, but it did, and it got back up to the upside. Now, why did we close this out today? Because that looked like it wants to go for a long ways, right? Well, the rules are, when you have a breakout of a triangle, once the breakout is finished, you're likely to go back to the midpoint of the triangle. That's where we were today. Does it go higher? I don't know. If it does, all right, well, we got out too early. Is anybody going to complain about getting out with 108% gain? I wouldn't think so. But that's the reason, that's the rules. So we just followed the rules. You have a triangle, it breaks out, and the recovery, once the breakout is over, usually goes back to the midpoint of the triangle. It's just simply learning the rules. And so that was the reason for the exit. So very nice trade in a short period of time. Now here's a longer one that I wanted to show you. Look at this on gold. So this is GLD, the ETF for gold. This is a monthly chart. So we're going way back now. And you can see where this resistance was in roughly this 75 area here, just right around 70 is where that resistance was. And we broke above it right here. So we broke above it. We came back down. We tested it. And then gold went off to the races. And so we had the big run in gold, and then we've come back down, and gold hasn't done much at all for a long period of time. So what normally happens when things don't move for a long period of time, They're getting ready to do something, and I think gold is getting ready to do something. I don't know which way it's going to go, because triangles, the rules of triangles is you don't pick a direction. It's going to do what it's going to do. But if you wanted to put something for longer term, we all like to do short term stuff, and I do too, but on a monthly chart, look at the size of this triangle, and when you're looking for where the move is going to be, you measure the mouth of the triangle, which is the widest part from a price standpoint. So we're down here around 70 and up at 180. That's 110 points. So that's $1,100 in the price of gold as far as where it's going to go. Now, it doesn't mean it's going to happen within a couple weeks, but I fully believe that there's a big move coming in gold. We're right here at the upper trend line. So could we break out from here? We could. Could we come back down and bounce here and maybe go right into the point? We could too. But one of the things that I learned early on in trading triangles is not to get too picky, because I can't tell you how many times I would see a pattern like this and I would wait. And I was thinking, all right, well, we're going to come down here and then we're going to go here. We're going to get right into the point, and then I'll get in. Well, it doesn't always go dead into the point, and I would just watch them go, and I had it on my screen the whole time, but I didn't take advantage of the trade because I wanted it to be too perfect of a pattern. We're really close right now. So a longer term strangle type of thing, buy the call and put way out of the money and put them off out in time, and just don't even worry about it, and see what happens a couple, 3 months down the road, and see where things may go. It's just the pattern is really, really good as far as the fact that I think gold is going to do something. That's a long consolidation for what, a few years we've been consolidating. The bottom move here was right in the beginning of 2016. So, over 2 years that we've been going just dead sideways, and near 3 years basically to get some sort of a breakout on a direction. So I wanted to share that one with you as something that you could look for. I wanted to update people that were on the last event that we talked about what was bullish, and we had highlighted already the fact that Elliott wave and the Fibonacci levels nailed this. We had 5 SPY put spreads. And I like to do butterflies to the upside, but I don't do butterflies to the downside because the market moves too fast when you're going down. So do put spreads. And the volatility has been high. You don't really want to just buy straight options when the volatility is this high, so you spread it off so that you're selling some of that high volatility as well. But we've had 5 of them in that downward move, every single one of them profitable. So anyway, that's what I wanted to share with you. I'd love to take questions, look at some charts, let's analyze some stuff. Anybody has something that we want to take a look at, I like to do that. I don't like to do back testing, Monday morning quarterback stuff. Let's look at where it is. Let's put our money where our mouth is. Let's see what it looks like and see where things are going to go. That's what I really like to do. So if anybody has something that they want to take a look at, I'll be more than happy to do that. Man, I got it done in 30 minutes, Tom. That's a freaking miracle.
You were awesome. You were awesome, man. You know what? I'm going to let Jay pick through some of these with you if he's on the line. So, Jay, do you see anything?
Yeah, Richard was asking Rob that if the SPY hits the 38.3 level, is it more likely to continue its upward move?
Yes, that. What a great question, but that's true. If it goes up and it hits the 38, if we come up to the 38.2% level, then yeah, then you would nullify this. Let me look at the SPY because it's cleaner. If it comes up there and hits that 38.2% level, then yeah. You would likely say that we are not going to get a retest. We're not going to go down to, not only would we not get a retest, but we wouldn't go down to 261.8 at all. If it hits 38.2, then according to Elliott wave rules, then that is nullified. Now, the other thing to look at, however, is that is right where there's a period of resistance, though, isn't it? So when we look at the boom, boom, and 3 times we came down to that level where the 38.2% is. So we could go up and hit that and find a point of resistance. But just because it's a point of resistance doesn't necessarily mean from that point we're going to come down. Following the Elliott wave rules, we would not expect a move down to 261.8 from there. So that's a really good question.
All right. Back when you were showing MasterCard, John was asking how far has MC retraced so far? Sorry.
Well, we had the wave 5 extension, so we've come back up. So he wants to see what this retracement is, so we can put the fib retracement level on it, and we are right at the 61.8% level. So could we find some resistance here? Now we've got that little gap, and that's always frustrating because we know gaps get filled. There's all kinds of theories as to why gaps get filled. I don't know that I know the exact reason why. I have my conspiracy theories as well, but they get filled. That's the bottom line, is they get filled. So we may bounce down and fill that gap, but because we're part of the larger pattern, the likelihood is that we're going to go back up to this previous 4. Now, we could possibly still be in a zigzag pattern to the downside. So since we've hit 61.8, you could also put a downside position on here with very little risk. So if you set it up for the expectation that now we're going to have the C wave lower because we had that impulse wave down, we bounced up to 61.8, and then we had the C wave extension to the downside. But if we bounce up and we hit that level, you're out. So if you put a spread onto the downside, and then we come up and we hit 202 or 201, just 201 and change, you close it down with a spread that wouldn't be much of a loss. So it'd be a small potential risk for a large potential gain to the downside. But this is one of those where that pattern is also in the part of the bigger pattern where we're likely to go back and test that previous 4. But you would certainly be well within the rules as well to put on a bearish position. Again, we jump up 10 points, you get out. It's not even 10 points. We're 195. So if it only moved up 6 points, then you'd close the downside trade out. But we're probably going to fill that gap here pretty quick as well. And then we'll see what happens from there. But yeah, these are really good questions.
Here's a couple of stocks before we have you and Tom wrap it up. Micron, MU.
Everybody likes this stock. It's amazing. It's talked about.
I got all these FANG stocks here, of course, but I figured I could do with something non-FANG related, because you probably got stocks ad nauseum. So there you go.
So if we look at Micron's come down, and it's in a similar boat as where we were with MasterCard. The problem is I hate these V bottoms. I don't like the V bottoms. I'm not a fan. Do they hold sometimes? Of course they do. But the majority of the time, you get some sort of a test lower. But if you wanted to follow with where we were and that this wave 5 is in, then we should be heading back up to this level somewhere in here. But I'd be a lot more confident if we had tested that wave 5 low rather than having this V bottom to the downside. And we're also, again, right into this area here, another one of those gaps of resistance. So I would watch the way the gap gets filled. And if we come down, even if we were just to fill the gap and come down a little bit lower to this area here, then I would think we were in great shape to trade things back to that previous 4 at that point in time. But even in the rules where when the wave 5 is complete and you retrace to the previous 4, I just don't like the V bottom setup.
Thank you. How about Twitter? TWTR.
Take a look at Twitter. I haven't looked at this chart in a while. This will be interesting. All right, so we don't have a discernible Elliott wave pattern here. So this is where we take that off, and I don't even have that on there. And I just look for the zigzag patterns. Now, clearly, that was an impulse move to the downside. See, now this is better. This isn't that classic V. So we came down and we consolidated a bit. We consolidated this downward move, and we consolidated it through this area here that has been a major support area. So let's see what this, and we're between the 50 and the 61.8% level here, but it's also pretty, when it's blasted off, I call this the launch pad effect. This is a perfect example of it. See how sideways this thing went right through here? When it consolidates sideways like that, and of course I live on the Space Coast, so it goes along with it, but the launch pad effect, when it goes dead sideways like that, more often than not, you get a vertical upward breakout, like a rocket going off, hence the launch pad effect. And that's exactly what has happened here. So if let's look at the DMI is my confirming indicator. Now here's a problem. So when we look at this, we've had this vertical breaking move here, but the black line is the ADX, which tells you the strength of the move, and it's not interested. It's not showing any sort of strength in that move. So I would be more inclined then, looking at that, to think that we're more apt for this one to be a zigzag pattern.
That might be a 3, huh, Rob?
Yeah, I think this one's going to be heading back down. There's no strength in that upward move, and it's vertical, so it blasted off. But what goes straight up quite often comes straight back down, right, Tom? So I think
yeah, and I think you need about a minimum of 6 months before you actually start to see the wave counts in almost any chart. And from what I can see right there, you just don't have it yet. But,
right.
Yeah.
Yeah.
So
I like
Rob,
I like this one to go lower from here. I like that one a lot. I might even do this one.
Any final thoughts, Rob, before I take it back from you?
No, other than I hope that if people had gotten away from Elliott Wave, that maybe they're getting re-energized, some re-interest in it, and love to be able to talk to them more later on in the year. Some more.
And absolutely. I'm going to talk about how to do that right now. One thing I'll mention before we get into our program for the year is I have a great way, and I'm going to show everybody how to do this. I have an absolute great way to get into gold, as you're going to see in just a couple of slides, with a special offer that I have done with some friends of mine through a gold mine-backed cryptocurrency, which is just absolutely fantastic. I mean, doing a solid. You just got to see what I'm talking about here in a moment. But Rob will be with us doing something called Elliott Wave Mastery a little bit later on in the year. And we're going to offer that program on its own a little bit later on in the year. But our partner program is something we offer once a year. We don't offer it to too many people. In fact, I think there's maybe only about 15 spots that are left after last night. But our partner program is really everything that we offer all bundled together for an entire year. And that includes our courses. These are our online mastery courses. They actually include the proprietary scan buttons of each. And that's Mike, Devin, Rob, Jeff, and Joe Contes. All right. I also do an 8-week class. That'll be something that comes around October 1st. And that comes with also the several different scans as well. Aside from our advanced online mastery series, which each of these are 5 to 6 weeks with the gang or myself, which is an 8-week class, we also include a year of our software, both that Complete Trader along with the real-time module. We have monthly webinar conference calls with myself where I go over market outlooks. I also have special guests on those as well. We also include a year of live market mentoring webinars. That's 200 live webinars throughout the year of myself and my team. I have some real-time modules I include in that as well as our 2019. We actually have a couple more coming on these robo algorithms. And of course, part of this partner program does include my cell phone number, which allows you to have direct access with me. The only thing I don't do is I don't give personal investment advice because, again, I'm not a registered investment advisor. What we do is with all of our classes spread out through the year and all the software and all of the live webinars we do have an event that we get together as a group live every year. Now, last year we did it on a cruise. This year we're going to be in Orlando, so we're doing it land-based this year. So we're doing a 3-day Oasis event in Orlando. I am dialing down the actual dates. We're looking at, I believe, as December 7, 8, and 9. That's going to be in Orlando, and I will have here within the next week or two, we'll have the resort locked down. that we're going to be doing this at as well. So part of this event, I actually have $100,000 in giveaways that I'm doing. I've got some really cool stuff that I'm going to be giving away at Oasis. And the only thing is you have to be there in order to get this stuff. It's a bonus event. We're bonusing it in for our partners. Everybody that comes to this is going to walk away with education and more. What we do, we bring the entire team in. We do 3 days of hands-on training. Each of our instructors are going to come with what it is that they specialize in, and then anything that we've added on since they did their teaching or since they did their piece during the year will be taught at the Oasis event. Now, this year we're going to do some bonuses. We haven't done these before. This is our 4th year of doing the partner program, and it very well could be my last year. All right, I haven't said I was going to continue to do these forever, and it's looking like this is going to be our last year that we're going to actually do the partner program. So what we're adding in is obviously Rob Roy's doing Elliott Wave Mastery. That's part of the program. But what we've also asked Rob to do is offer his real-time alerts during the program. All right, so that's going to be offered as well.
I forgot about that.
Yeah, and the other thing too that we got to let everyone know is that the folks over at Hub I've been talking with, they have been working on a cloud-based profit source / integrated investor. I think they're going to call it Profit Source Mobile. Anyway,
yeah, that's
brand
true.
new software piece. They haven't really done anything in, I would say, probably about 10 years. But they have been working on this. This is something that's going to work on your phones, smartphones, Android devices, iOS devices, iPads, et cetera, which is where a lot of people are going with their information these days. And so we're going to include a copy of Profit Source Mobile. And it's also going to have Rob's Elliott Wave indicators on it, especially for this group. It's going to start in mid-2019. So it's not ready yet, but it's supposedly going to be ready in just a few months. The other thing we're doing is we are doing something called our insider deals. This is something that I'm going to be talking about during our monthly calls. For 2019, we've got an alternative investment opportunity. We've got an LCE tax investment opportunity. But the one we're adding on, which is really brand new, we haven't done it before, and it will not happen again, is we have a cryptocurrency that's backed by a gold mine. It's actually, there's some details here I'm going to give you right now. So this is a token, all right, digital currency, and it is in the gold industry. It's a security token. It's fully compliant. It pays out a quarterly royalty, which is expected to increase. And right now, in fact, as of today, I just looked at this, added on my Blockfolio portfolio, and this coin is actually at $11.24 right now. This thing moves with gold, but it also moves with Ethereum. So as Ethereum goes up, it goes up, but as the price of gold goes up, it also goes higher. This symbol, you have to be a partner and you have to be part of the program. And what we're doing is, I'll just let you know this. We are going to be offering through this group, this is going to be them. They're doing it for me, for my program, is they are going to give you a secondary, like an offering straight from them to you. You won't need Coinbase. You won't need an exchange. I mean, you will eventually when you want to sell them, but you won't need it to get them. All right, you'll be getting it direct from the company, and you're going to be getting it at a much lower price than $10.37 or $11.24, which is it's at today. So really cool. And when I say much lower price, I mean, how about 80% off? You're going to get that. And why would this guy do this? Well, number one, I know him pretty well. He's a good friend of mine. He's not greedy. And number two, he wants to put some more coins out there in the to add to the liquidity. All right. But here's the catch. All right. They are they're restricted, which means you can't just get them and then turn around and flip them immediately. There's going to be a holding period on these, but you will get the royalty. And that's the other thing he's looking for, is that as you get the royalty, you may not want to sell the coin. All right. So that's something.
Well, Tom, sorry to interrupt, but think if gold breaks out of that wedge to the upside, how much those things are
exactly.
Unbelievable.
That's exactly what I'm thinking of.
Could be massive.
And I just actually got some news. They just did a press release this week, and on the current mine that they did a core test on this. Now, we'll get into this later with the partners, but most of the gold that comes out of the world comes from South Africa. So in order to grab, if you were to unearth a ton of raw material from South Africa, you get about a quarter ounce of gold. All right, they just did the core test here in the gold mine that we're going to be covering, and this one actually came out to be over 3 ounces in the ton, which is much, much greater than a quarter ounce. So they're really happy. They're dancing around. It's great because, these guys have known this stuff was down there. They got reports of it, and now they've done a real core sample and done an assay, and it's proven to be actually more than they expected it to be. But this is going to be part of our partner program, guys. We've never done this before, and so I'm going to have these guys come into one of our webinars and present this to you, and you'll get to see it is an absolute first-class operation. We'll talk about it more in the program. So the program we're doing this year is, if you were to take everything that I just showed you and pushed it together, it's over $36,000. That's our platinum package. All right, we are offering our platinum package for $11,552. That actually ends up being about 65% off of the regular price. Now we're doing it in payments. So one payment now, one payment in 60 days. So it's 2 payments, $57.76 each. This is everything I just talked about. All right, if you want something a little slimmer, we are offering a gold package, which is myself and Rob's mastery courses and everything else. That's going to be $85.64, or 2 payments of $42.82. And then finally, we've got the silver package. That is my 8-week mastery course and all the tools and partner benefits, as well as the Oasis event, and of course access to the insider things that I just talked about, including the gold crypto coin. And that's going to be 2 easy payments of $28.88. All right, how do you get this? www.tomgentile.com/partner19. So if you go to tomgentile.com/partner19, I'm actually going to put it right into the chat room link. Let's put that here. And let me also put it in the Q&A box so that everybody, if you don't see it on the chat, then you should see it now in the QA box. All right, so if you go there and you click on that, you'll open this page up you see here in front of you. If you simply read through it, you can see everything I just discussed. Down at the bottom, pick your package, whatever one that you want. If you click on it, what's going to happen is it's going to take you to our terms of service page. All right, read through that, click on I agree, and once you've done that, it's going to take you to our PayPal page. You don't need to have a PayPal account to take advantage of this. If you have a PayPal account, all the way down, well, first you'll see the checkout, the first payment, and the second payment comes 60 days later. All right, there's only 2 payments. If you look down here at the bottom, if you have a PayPal account, you click log in and follow the directions. If you do not have a PayPal account, you can pay using a credit or debit card by clicking below where it says credit or debit card. All right, so that's our partner program. Like I said, we only have about 15 spots left on that. They will fill up, or either that they'll be gone, or the time will run out, which is going to be Sunday at midnight, and then we've locked that in, and we're going to move forward on it. I only offer it once a year. I can tell you this, the reason why we only have 15 spots, well, half a dozen of them left us in the last day since we started this, the first session, but the majority of our spots, our partners from last year renewed. We had many more partners renew than we expected to renew. And so just kind of gives you an idea of what we do with this program. So it really is, I kind of call it our kitchen sink. All right. We will be, people were asking yesterday, we will be doing Mike Wade's mastery class on its own. All right. We'll talk about that here later in the year. We will be doing Rob Roy's mastery class later on. We'll be doing all of the mastery classes later throughout the year. But if you want them at a special package with our software, with everything we have, this is a couple of different ways you can do that by bundling everything together. Jay, is there any other questions or comments you want to say before we close it up tonight?
I appreciate you offering me that. Yeah, the Oasis event, that's bonused in, guys. So there's no price adjustments whether you go or not. That Oasis is a bonus to the program as well.
Yeah, we put that in there at the last minute. We thought it was something that we wanted to add in. We'll be offering that as well later on in the year. And there may be some additional guests that could be coming to Oasis this year that are outside of our instructors. We may be having some pretty cool guests coming along. I cannot say who they are because I cannot confirm, but I have got some guys who are excited about coming to Orlando that are big time in the business of trading. So this is going to be a first as well for those of you that are going to be going to Oasis. All right. Well, thank you very much, everyone. Again, I will have a recording out to you shortly after. Thanks, Rob. I appreciate you spending your evening with us. Very good information. We had a lot of folks that wanted me to pass along their thanks, and they're excited to hear that you're back with us again. And
thanks, Tom. Appreciate that.
You're welcome, buddy. And we will see everybody soon. All right. So thanks, everybody. Have a great evening. Recording will be coming to you soon. Talk to you later. Bye now.